Hello again. We're going to have a look now at the balance sheet in the incomplete records net worth method. We've done our 3 steps to prepare. We've found the opening capital and goodwill. We've done the adjustments for arrears and prepayments, and we've calculated the drawings. So we're on now to the balance sheet to find the net profit. That will allow us then to work backwards through our trading profit and loss account. We can see our tangible fixed assets here, the premises, 442,000. That comprises the original 292,000 plus the extra 150,000 that they bought during the year, 120,000 euro of that coming from the loan and 30,000 from Fuller's capital introduced. Then we've got equipment of 35,000 on which we've already written off 2,750 euro in our adjustments above. And we bought delivery vans for 30,000 euro during the year on the 1st of the 9th. And we've got a third of the year's depreciation in there for the 1,500. In this question, there's no prior year depreciation because Fuller bought this business at the start of the year. So the figures in the profit and loss account and the balance sheet for provision for depreciation will be the same. The goodwill of 6,250 was the extra amount that Fuller paid to acquire the business, and we did that in adjustment number 1. And the business had 50,000 euro worth of investments since the start of the year. The income on which we've already lodged to our bank account. We've got our 4 current assets here, or closing stock, the heating oil left over at the end of the year, the 3 months prepaid rates, that's 1 quarter of the 7,000 that was paid. It belongs to next year, 1,750, and our debtors less the 3% we expect to lose or could lose from bad debt. So we've got a 3% provision for bad debt. So we've got 55,230 euro in current assets. And just looking at the current liabilities then, we have 5. There's the loan interest due, and there are the 2 installments. Remember now that the loan is repayable in installments of 6,000 euro each, and 2 of those installments are due in the coming 12 months. One on the 1st of February and the other on the 1st of August. So that makes them current liabilities, or liabilities falling due in the next 12 months. There's the unpaid electricity bill of 460 euro. We owe our suppliers 35,400, and the question tells us our bank account is overdrawn by 5,400. So our current liabilities 54,260, almost equal our current assets. We've got very little working capital, 970. So our net assets are 559,970. If our net assets are 559,970, our capital employed must equal the same figure, 559,970. Now we know that our liabilities due in a year, the bank, or more than a year, the long-term liability for the bank loan is 108,000. That's the 120 less the 26,000 that have become current liabilities. So of our capital employed, 559,970, 108,000 are liabilities due after a year. So this figure here must be the difference between 559,970 and 108. So capital employed, 559,970, long-term liabilities, 108,000. So this figure here, the capital at the end of the year, must be 551,970. So that figure here is 451,970. So capital plus capital introduced plus profit less drawings must give us 451,970. The 36,000, by the way, is the 30,000 that Fuller introduced, which was used to buy premises, and the 6,000 is the EU grant. And as it's a sole trader, the grant is payable to the sole trader, and therefore that's looked on as capital introduced by Fuller. So again, the capital introduced plus the original capital, so the original capital plus the capital introduced plus the profit less the drawings must be 451,970. So using your arithmetic, leave the profit here on the left, bring the 400,000 and the 36,000 and the minus 19,422 to the other side, changing their signs as you know, and it means that our net profit is 35,392. 35,392. And you would fill those figures in here where the question marks are in the balance sheet. So armed with that net profit 35,392, we can now have a look at the trading and profit and loss account. Just zoom out for a moment. We're saying the net profit is 35,392. And we're going to work back towards our trading account, filling in the blanks. So, net profit is 35,392, and these 7 expenses, all of which have been explained already in our adjustments. We have our loan interest, the wages and general expenses, rates, light and heat, the provision for bad debts, and the provisions for depreciation on delivery vans and equipment. They all total €94,008. So, the gross profit plus the investment income less 94,008 must be 35,392. So that must mean that the gross profit and the investment income must be the sum of those two figures, 94,008 and 35,392. That's 129,400. As the investment income is 2,500, the gross profit must be 126,900. And the question tells us that gross profit is 20% of sales. So divide by 20 and multiply by 100 to get the sales figure of 634,500. That's C in the above. And the cost is the difference between, the cost of sales is the difference between the gross profit of 126,900 and the sales of 634,500. Or if you like, if gross profit is 20% of sales, cost of sales must be 80% of sales. Either way, the cost of sales is 507,600. We would add the closing stock back to that to get the cost of goods available, 527,800. And the missing figure would be our purchases, 491,800. That 491,800 would be the purchases figure after the drawings of stock. The stock drawings in this question were €80 per week. You would then fill in those blanks up there to complete your question. As is typical in these questions for incomplete records, you're often asked what advice you'd give the owner. Be careful not to imagine that they're asking for business advice. That's not the case here. The advice you're giving relates to the fact that you're dealing with incomplete records. So your advice would be, keep proper books of accounts, like the cash book and the sales and the purchases book. And of course, you always post those books of first entry to the ledger and mention an example of the ledger, like the debtor's ledger or the general ledger. And then at the end of the accounting period, you'd extract a trial balance. And in that way, you can calculate your profit accurately and have accurate figures also for your assets and liabilities in the balance sheet, and you won't have to rely on estimates.